Welcome back. At a time when term deposit rates are excruciatingly low, investors are looking for high-yield alternatives. Philip Carden is Portfolio Manager of Supervised High Yield Fund at Supervised Investments Australia, and he joins me at the desk to tell us how he's finding high-yield assets right now. Philip, thanks for joining us.
Thank you, Peter.
So, are you staggered where interest rates are now?
I am actually, yes. I just didn't think that they could stay this low for this long. I mean, especially night before last in the US. I mean, their CPI was up 0.4 month on month. Yeah. Well, we can multiply that by 12, and the bond rate over there is still at 1.8 for the 10-year Treasury rate.
Yeah, but you understand bond markets, and most people don't. What in the hell's going on there?
Look,
are they too negative, do you think?
I think the central banks have just been buying too many bonds, quite frankly. The economy is not responding to that stimulus, I think mainly for demographic reasons. I mean, the US has got a growing population, but certainly in Europe, where we've got negative rates, and Japan, there's no population growth. And I think it makes it, you would be better to comment on, but I think it makes it difficult for economies to grow no matter how much money you pop into them. Unless we have good, strong population growth, which we have in Australia through immigration.
Look, I feel as though we're in a big testing point for America in the sense that, OK, the economic data is better than what the doomsday merchants were predicting in January and February at the moment. But it's going to be interesting to see whether the stock market can tolerate an interest rate rise if we see one in June or July. Do you think that's an important test for the whole?
I think it is. I think there's a fairly good chance you will see one in June or July, and I think it will be a big test of the market over there. I mean, the banks, I do a lot in the leveraged loan market in the US where they lend to medium-sized companies. And the banks have really tightened up on lending to that sector, which could also have negative effects on growth. So it'll be interesting to see what happens.
So tell us about Supervised Investments Australia. It sounds like a government organisation, doesn't it? Supervised Investments.
Well, we're supervising the investments. We're a managed fund. We're on two managed funds, the Supervised Fund and the Supervised Global Income Fund. The Supervised Fund is an equity fund, essentially, and I run the Supervised Global Income Fund, which invests only in debt securities. So we take a reasonably conservative approach. We created the fund in the GFC, and we adopted an investment philosophy where we don't really want to lose anybody's money, especially our own, which is also in there.
A lot of my viewers would agree with you on that too.
So we just go around the world looking for debt securities that will pass our stress testing regime, which is based upon default rates and realisation rates that you would see in periods like 07, 08 or in 29, 30, sort of 33. The depression and the recession that we've had, and then when those securities pass those stress tests, we will buy the ones with the highest yield. So it's a reasonably simple approach. It requires quite a lot of discipline and work. We've had a good run. We've averaged about a bit over 9% since we started, and looks like we'll probably run at about 5 to 6% this year, which is not too bad.
Which is better than term deposits, which of course is what your potential customers compare to, don't they?
Yes.
Even though we know you're not as safe as a term deposit, you're certainly trying to be in that space, aren't you? The low risk investment alternative.
That's correct. But it's interesting. I mean, we buy a lot of asset-backed securities, like mortgage-backed securities or corporate loan-backed securities, where you have security. A term deposit, of course, is an unsecured deposit with a bank, so there's no direct...
Backed by the taxpayer of Australia.
Yes, that's right, the government. I'd hate to see what would happen if we ever had to call on that one.
So it's a mixture of government bonds and corporate bonds and mortgage-backed securities. Is that the main mix?
Yes, well, at the moment it's a mixture of corporate-backed securities and residential mortgage-backed securities. We haven't bought any government bonds because we're trying to create a higher yield. So what we'll do is we'll look at a pool of mortgages and we'll stress them, and if we like the results of that and we think that bond will pay back 100% of its principal and interest, well then we'll go in and buy them, and we can get securities at the moment that pass that sort of a test that yield anywhere between 5 and sort of 8% over BBSW, which currently is about 1.75%.
What kind of investment does someone have to make to play ball with you guys?
Oh, we're a retail fund, so you can invest as little as $10,000 and you can take $5,000 out. And so it's
and distributions? How often?
Quarterly. Yeah. We distribute quarterly, and we're distributing at the moment in the order of about 6% because we bought a lot of discounted securities. When the GFC happened, nobody wanted to own mortgage-backed securities, so you could buy them for 60 cents in the dollar and 70 cents in the dollar. Well, those securities are now paying back at 100 cents in the dollar that we bought back.
Were they local ones or international ones?
All Australian.
Yeah. Gee.
Yeah. Well, Australia had the best.
We went mad during that time, didn't we?
Well, the Australian government bought, I think, $14 billion worth. They set up the Office of Financial Management and started with $8 billion and then put another. But they were buying the prime AAA-rated securities. We were able to look into the bonds and find safe bonds that had lower credit ratings and much higher yields. But the yields have come down a lot since then. You could buy at 15, 16% then, and now what you bought at 15, 16% back then, you're only buying at about 7 or 8.
What's your outlook for the Aussie economy? Is that an important part of your investment strategy, to have a confidence factor on, for example, the Australian economy and the global economy?
Yes, we select what we think is the best economy. We take a top-down look at all the global Western economies, and we'll select the economy that we think is going to grow the most. We started switching out of the Australian economy investments a couple of years ago, favouring around the beginning of 2014, favouring US dollar corporate investments. That's gone reasonably well. There's been a few bumps in the valuations, but that's gone quite well, and I still think that market's got quite a bit to go. Looking at the inflation numbers and the employment in the US, I agree with you. There could be a bit of a shock with the tightening because the market certainly wasn't expecting it up until last night.
But in many ways, if they do tighten early, it is only because the run of economic data is surprisingly good, isn't it? They're not going to do it unless they think that. And in many ways, if the leading economy of the world can't start to approach normalcy over the next couple of years, God help the rest of the world in many ways.
Yeah, that's true. But I think Australia's, though, in quite a good position given our neighbours and the density of population north of us.
Yeah. I came across a very interesting quote today from Anatol Kaleski, which I'm sure you've read over the years in the Financial Times. He actually said, he's now got a private research company, he said, Australia does not look to have the real economic problems that we've seen elsewhere, which I thought was a very nice observation from the UK of our economy.
Well, it's certainly nice to be here and to be able to run your business profitably. I mean, it's out where I live in the western suburbs, west of Sydney near Windsor. The growth is unbelievable, what's happening out there. Mainly in housing and industrial construction, but there's just a massive amount of growth going on.
Phil, one last question. Have you guys, formed opinion on some of the accusations or claims that we may have a serious housing problem similar to the subprime problem in the USA? When you hear that, what do you think?
I don't think that will happen here. We have a totally different mortgage market. In America, you can borrow money, and if you don't like the debt, you give the keys back to the bank, and the bank can't touch you.
You drive away in a Ferrari as well.
That's right. In Australia, the bank will chase you personally, so that's a much more secure lending market. Secondly, I just think with the population growth, the prices may be a bit toppy at the moment, but I don't think we're going to have anything like what happened over there. They had a very badly structured market.
I'd like to see a fund manager with points of view different from a fund manager who was predicting it this week. Philip, thanks for joining us.
Thank you, Peter.
So that's Philip Carden from Supervised Investments Australia.